So this week we're going to see the Federal Reserve meet for their last time in 2022. So let me put this into context. Why do we care about what the Federal Reserve is doing? Well, if you're watching this channel, you're probably concerned about you really would like to be buying a house, your first house maybe, or maybe your first investment property. So we focus in on the Fed because the Federal Reserve is basically controlling everything today. If you see when the Federal Reserve talks, usually the stock market either rallies big or crashes. Same thing with mortgage rates. So we really focus in on what the Federal Reserve is going to do. So what I want to put some things into context right now. When we were in pandemic time, you can see on your screen right here, look at this, June 6th, 2020. It was on a Saturday. One of the captions back in those days was, and it seems like so long ago, was, is the economy actually going to correct itself? Is it going to come back? And what kind of rally or what kind of comeback are we going to see? So back in those days, 2 years ago, I predicted that we'd see a V-shaped recovery. Basically, that means we were at the basically rock bottom of the economy. Unemployment rates were out the roof. Nobody was spending. Everybody was locked in their homes. And then all of a sudden, when you open those doors, what was happening? So everybody expected, well, what's the consumer going to do? Are they going to just kind of gradually move back into the market, or are they going to just robustly jump into the market? And that's what we'll see, maybe a V-shaped, automatically a boom, right, recovery back in the market. Well, that's what I predicted, because I talk to people every day in all facets of the economy, and people were busting in and out the seams. They're like, I want to get out. I really, truly want to go back to work. I want to do this. I'd love to travel. And we saw a V-shaped recovery. So now the Federal Reserve is like, wow, we did all this stuff to basically help the economy come along during the pandemic, but did we overdo it? Did they overdo it by making rates basically zero for a long time? But did the federal government have something to play in this, because they kept pumping out stimulus money? That was my thought behind all this. I'm like, okay, you basically made money free, and then you just start giving it out. So that was my expectations on this, and we've seen it. Okay, so we've seen basically a V-shaped recovery. But back through here, if you go through the context of this, and I highlighted it here shortly just so I can grab the context of it. When you go down through here, you can see one of the reasons why I thought of this is the PPP program. Look at the PPP program. It actually provided $267 billion in disbursements to people. Okay, so people were getting, a lot of people didn't even lose their jobs. They either got unemployment, they got furloughed or something like that, but then they also started getting PPP and all this other stuff. Okay, so that's what basically brought us to this. You had too much money in the system, too much demand for products. And then remember, at that time, basically the world was shut down. So we didn't have supply, and we had supply chain issues. So you couldn't buy the goods you wanted, but you had the money. So what happens is people drive up prices to the point where there's enough supply to meet that demand. And now those things are not coming down as fast as we expected. Okay, so that's the context of all this. So the Federal Reserve now is stepping in saying, okay, we're not going to keep rates at zero anymore. We're going to jack them up. And they've jacked them up faster than they've ever done in history. Okay, so that's coming in. So that's why we're watching right now what the Federal Reserve is going to do, because they play a big role in this. So inflation has peaked. This is what all analysts are saying, that inflation has peaked, but it's not returned to pre-COVID numbers. Okay, so what does that mean? Well, it basically means that people continue to spend. They had a lot of money in disposable income, and now the supply chain issues starting to fix itself and everything else. So things are starting to get a little bit back to normal. So what we want to focus in on here is what the Federal Reserve is going to do. Are they going to actually take their foot off the pedal finally? Because we're starting to see all kind of numbers come back in that tells us things are coming back in line. We're starting to see, the only thing really peaking right now is leisure and transportation. People are traveling like crazy. People are going out to dinner. They're going out for drinks. They're going out to movies. They're doing entertainment. But a lot of people are starting to really cut back on extra stuff. The extra, everybody's still focusing on food and everything else, but they're starting to really, not buy as much of the fringe. Okay, so inflation has peaked. I know I rambled on, but I want to explain to you guys why we do this video and why we are focusing in on the Federal Reserve, because the Federal Reserve is looking back now saying, okay, we had the V-shaped recovery, but we still think people have too much money and people are spending too much money. and they're buying too much in goods. Thank God we have a supply chain issue that's really ceased. A lot of shipments from the West Coast has moved to the East Coast, and all those things have changed around. So they're almost back to normal. Okay, so we've seen what? We've seen oil prices dramatically plummet. They're basically, they've dropped about 30 or 40, maybe 50% in some areas. Okay, we're seeing lumber prices, a lot of commodities and raw goods, basically 50% or 75% off their highs that we've seen in March and June. So we're starting to see a lot of things coming back in. So now we want to focus in on what the Federal Reserve is going to do. So they're meeting this week, and then they're coming out on Wednesday, and they're going to tell us exactly what they're going to do. So the expectations in the market, and from me, are they're going to raise rates 0.5%. And then they're going to announce maybe what they're going to do in 2023. That's the key point, because we all know that they're going to raise rates 0.5%. Okay, that's pretty much baked in. But what we want to focus in on is their future guidance. So I'm going to make a little change here. What I'm going to do is on Wednesday, when we do have the Federal Reserve going live, we're going to come in, we're going to go over what the announcement is initially. Then we're going to have a discussion. I'd love for you guys to join us. It's going to be a live Q&A. Ask all the questions that you have, or if you're a realtor, you're an economics major, maybe you're in the mortgage business, let us know your feedback. And then what we're going to focus in on is we're going to wait, we're going to have a conversation until actually Federal Chairman Powell actually speaks. And then based on what he's talking, I'll put that into English for you, in foreign language, but put it in the common languages for you, what he's saying, and then we're going to watch the markets move. And it's pretty interesting. So if you're out there and you're economics major, or you're new to the mortgage business, or you're a realtor, you need to know these things, okay? So that's what today's or this week's focus is going to be on, is what the Federal Reserve's doing, what they're looking at, and then what decision they're going to make based on that. So we have some economic news coming in this week, and it is right here. What you're going to see on your calendar is we have the news of the CPI, the consumer inflation on the consumer level, what it's coming in at. And we're going to have that number on Tuesday. And then Wednesday, the Federal Reserve is going to come out. You can see that right here. Federal Reserve is coming out, and they're going to give us their announcement later on Wednesday. But look at the consumer price index, the CPI, the consumer inflation numbers coming out the day before the Fed. So we're going to watch this. The markets are going to watch this. So you mark my words, tomorrow, if this number comes in a lot more aggressive than the numbers you're seeing on your screen, you're going to see the markets crash, okay? Crash big, and you're just going to see mortgage rates spike. Okay, so what we're expecting, though, is this the number to be flat to low. Okay, if it comes in flat, we're probably going to see a little rally in the markets. We're going to see a little bit better off in mortgage rates. But if this number comes down dramatically, all bets off. You're going to see the market rally and mortgage rates maybe get back down in the low fives. If not, we might peak in the high fives. So can we be in the fives by the end of the week? Maybe. So let's get over to basically with the information that we have so far today, what are we expecting to happen to mortgage rates? So we go over to this, and the mortgage-backed security is pointing in a good direction. Let me explain to what you're seeing on your screen. This is a mortgage-backed security. It's a bond that trades on Wall Street. That this bond is actually the biggest component of your mortgage rate, believe it or not, okay? So a bond sells on Wall Street. That's the mortgage-backed security. The yield on that thing actually moves over to your mortgage rate, and that's the biggest piece of your mortgage rate. So that's why we follow this. Just to give you some basic information about this, what you're seeing on your screen is the price of the bond. Okay, what all you got to take out of this is as the price goes up, you're seeing in this equation, you're seeing the price go up. You don't see that often. Look at that chart other than the last few days. But when the price goes up, rates come down. So we love when rates go or the price goes up. So, but you could see since the beginning of the year, back in, well, this only goes to July, it's been down and down and down. What does that mean? Well, it means rates are going up. So we've seen rates basically double so far this year, and they've really come off those highs. So where are we right now with mortgage rates? Here's where we are. Look where mortgage rates are on the 30-year fixed, 6.38. Where were we just recently ago? 7.38. So we're 1 full % down from where we were. So if you locked in the sevens, please reach out to us. We would love to be able to get you out of that loan. Or if you've locked in and haven't closed yet and your lender's like, there's nothing we can do, you're already locked in, I got an idea for you. So basically what you're seeing on your screen right now is the rates, the average rates across the country issued by Mortgage News Daily. You can see that right here up in the top corner. These are not my rates. These are not any individual lender's rates. These are the national averages. So if you're looking to buy a house or refinance or something like that, this is probably an area right around where you're going to be. To find out what rate we can get you, or Dan, what do you guys do? Well, we're a mortgage advisor. If you want to find out what we do, go to therateupdate.com. We'd love to talk to you about refinancing, getting pre-approved to buy your first house. If you need a reverse mortgage, love to help you there. Debt consolidation. Maybe you want to renovate your house instead of selling it and buying a new one. Love to help you there. But if you're already locked in, or if you already got a quote, what I need you to do is, everybody tells you, get 2, 3 quotes. Wonder if we can get you 80, 84, 85. How do we do that? Well, easy. When you apply with us, or if you haven't applied with us, send me your loan estimate. Okay, so how do you do that? So you click up here. So what happens? What am I talking about? Okay, so if you're in the mortgage process right now, or you need a mortgage, you reach out to a mortgage company, a bank, a lender, a mortgage broker, whomever, and you get a quote. So if they give you a quote, in that quote, there's going to be what's called the loan estimate. The loan estimate basically breaks down the whole loan. It gives all the numbers. It gives the price of the house you're buying, the loan amount, the rate, is it locked in, and all the fees. What I want you to do with that, because we're going to help you guys, is go to my website and click Loan Estimate. You're going to click that. What you're going to do is answer just a couple questions right here. And down at the bottom down here, what you're going to do is you're going to drag and drop your loan estimate right in here. Within hours, we're going to get back with you. Let us know how you want us to get back with you. It's going to be right here. Do you want us to call you, email, or text you? But what we're going to do is we're going to run your numbers through our system. We have a system here that runs it through 85 lenders that we are set up with, okay, to be able to offer you all their programs, their rates, their products, everything. What we're going to do is we're going to do the shopping for you. You upload your information in here. Let us get back with you. We're going to check, can we get you a better rate? Can we get you better fees? Or can we get you all the above, better rates and better fees? And that's what happens in most cases. So we'd love to help you, but that is my report for today. This is going to be a robust week on Tuesday and Wednesday, so please stand by, and please join us Wednesday on my Fed meeting. And then also Kyle and I have a Wednesday live event also at 5 o'clock Central Standard Time, 6 o'clock Eastern, where we answer all your questions. If you're looking to buy your first house, maybe your first investment property, you got questions about student loans, maybe credit, love to answer those all at that point, because it's a live Q&A session for you guys. So that is my report for today. All I ask you to do is, if you like my videos, please give us a thumbs up, subscribe down below, hit the bell every time I post videos. You get an alert. Take care, guys. See you tomorrow. Bye-bye.